Hi guys, this is Dan with Index Option Trading, and we start off with the chart of SPY here. And looking at it here, today was a different day. It's 221 million shares traded here. This market is very much in trend, and this is a bullish trend here that is continuing. And if you look at it, I try to put my cursor here, see if you can get that or not. But this thing is extremely bullish. And in my last videos we talked about it here, this thing, the Bollinger Bands. Let me put this one study on it here, and you can see, look at it, it is tagging the band here. In the last video we talked about it, move down here a little bit, and it can still move down to 120 levels or so, which is normal. And then the market would be will be able to again lift up from there. So there is a possibility that we may see some kind of a move down, just a small one, not anything, but the uptrend is still continues very strongly. So let's put on these moving averages, and I'll show you why. This is a 21-day moving average, and you can see it is rising. The 50-day moving average is rising, and the 200-day moving average rising. Then when all three moving averages are rising, this is a trending market that is going higher, and there's no telling about it. The moving average is simply the average of prices that have closed over the certain number of periods, which in this case was 21 days, and the 21 day is very strongly up. You can also use 10-day moving average for short-term trading, but this is what the swing traders use, 21-day moving average. So with this thing is being extremely bullish, let's look at some of the stocks that we're holding. And if you want, let's go back and take a look at SPX here, one more thing. And SPX is again in the same boat. It's in a rising channel here. It smashed that channel here, and it cleared it up, and now it's just making a flag here. And it's a continuation. I believe that's what it is. 20-day, 1-day moving average is strongly right there underneath this trend line that I'm putting my cursor on. 50-day moving average rising, and the 200-day moving average rising here. So everything is moving higher. That is what the trend is. The market is improving. The Feds are going to buy $600 billion of treasuries, and the economy has improved. Last Friday, the job reports added 151 jobs, and I'm expecting in December they're going to start adding 200, 300 jobs a month. And that is why the Republicans are now in the Congress. The market mood has changed, and we're seeing this bullishness in the market. Post-election, midterm, usually that has been the trend. The market goes up higher. And that is an article that was published a long time ago and in Market Watch. Now let's look at it at the stock Apple, and we have a position in it. Why are we trading Apple? Because it made a bull flag here. It's rising above its 21-day moving average, and it's sitting here at 318 and trying to go up higher, hopefully. But it may come down here even during the day and touch 310 or something, which is not something to be scary. Our position is at 290, which is the 50-day moving average. I chose that on purpose, and I did not want it to go above that 290, because in case if it drops, this is protected by this 21-day moving average, and then we have another barrier here, which is 290, this moving average. So that is where the price will probably get stabilized if everything fails here. That is the reason we chose those strikes, based on the technical reasons that are assigned here. Let's look at it. NFLX, this is one of the most bullish stocks around here right now in this rally. And if we put our cursor here, this is a rising wedge. Is trying to, this is a consolidation pattern that is accepting here, and what it is trying to do here is rise from here above to 185 levels again. So we sold these puts here at 160, which is definitely below the 21-day moving average, and we're pretty safe here in this regard, because 1200, about 16, 17 points the stock has to drop before it can do any damage. And now we look at it, the stock AMZN. It is also a similar bullish chart. It's a very strong stock at this time, and it formed a bull flag, and then it started moving up higher and started consolidating 173 levels. Our position is 160, which is below this bull flag, below this 21-day moving average, and just above that, we're really about right at the 50-day moving average. So we're just continue extracting money from the market as fast as we can. This is not a time to sit back and not take any trades. This is where most people make their money between now and the 1st of January. We got at least 2 months here, solid 2 months to earn some of the money back. So that is all for today, and I'll talk to you soon.